Let's talk about what to look out for in a credit check report to avoid late paying clients. So lots of freelancers do conduct basic client due diligence. Usually they'll search their client on Companies House. Is it a legit company? Have they filed their accounts on time? And that's a pretty good start, but for many, that's where their due diligence starts and ends. And there's a lot of useful information that can actually be taken from a credit check report that may indicate whether a client has a history of not paying suppliers. And that's what we want to find out. We want to get on top of these problems before they happen. So I am going to run through how to build a picture of your client's financial health. I think there will be lots of good tips in here. So let's start with the risk score. This is where we always start. It's a very basic factor, but it gives you a high level glimpse into the financial health of a company. It doesn't really provide any more context beyond that, but it is useful for gaining an understanding whether the company you're about to work with is in immediate danger of going out of business. If there is a risk of insolvency, then you'll want to either avoid getting into business with them to begin with, or alternatively, you could change your payment milestones. Maybe you'll accept 100% of the payment up front, eliminating the risk of non-payment in case they do go out of business. The second thing we want to look at is the commentary. This provides an overview of the health of your client. So it will point out facts like whether the client's posted a loss, if they settle supplier invoices over a longer or shorter duration, and whether they have a high amount of cash available, which is of course a good thing. Usually you will find the commentary is a mixture of positive and negative factors. So for example, this company's latest profit and loss reserve shows a high amount of retained earnings, but their trade creditors show there's a high amount of outstanding obligations. So if you're seeing lots of negative factors, then you might want to reconsider your payment terms with your client. So if you price based on project milestones, it could be worth collecting a larger percentage of your fee upfront. Moving on to financials. Financials go into more detail about the company. So if anything newsworthy pops up in that commentary overview, you can then dig into this section to learn more about it. So some of the factors to review are turnover. Has the client had a good year? Usually the report will show 5 years worth of data. So if they have a history of poor turnover, this could obviously be concerning. I will say, obviously, if they're VC backed, then turnover might not be used as an indicator of success. We'd also want to look at retained profit. A profitable client is of course likelier to pay you on time. Cash. It's always positive to see a client with a healthy pot of cash, because if available cash is low, can we be confident that they will pay you? And then bank loans, finance and creditors. It's important to understand if your client has a lot of liabilities, because creditors will have priority for getting paid. And if they're borrowing lots of money, it could imply there are cash flow issues. So in isolation, each of these factors don't really tell us much of a story, but the credit check report helps us form a bigger picture. We can kind of start putting pieces of the puzzle together to determine if our client is one that we want to work with, and if we need to adapt our payment terms or decline the project altogether. We can also look at the legal filings, which is, in my opinion, one of the most important areas to look at, because it will show if a client has any county court judgments against them. So these are issued against the company if they don't pay a freelancer's invoice. And this is publicly available information, so you should absolutely be making use of it with every client. Not only will you see how many your client has, but if they do have any, it will tell you the date it was filed against them. So this should act as a red flag, especially if we're seeing that they've been issued with this recently, because this could, of course, indicate immediate cash flow concerns. HM court notices can also be helpful information. So if HMRC have sent a winding up petition to the client due to unpaid debts, you'll be notified of it here in this section, along with safe alerts, which tell you if directors have been linked with other companies that have been liquidated. This is important because if a company director has a history of liquidated companies, well, that doesn't really instill a lot of confidence in who you're doing business with. But again, I must stress, in isolation, each of these factors may not be negative. What you're aiming to do with a credit check report is build a picture of your client. Let's move on to the payment analysis. Not every client will have payment analysis data available due to a small sample size, but if you're working with larger companies, there usually is some data to dig into, and it's really interesting because you can see how many invoices are settled within payment terms, overdue, and by how many days they're settled overdue, and then how many invoices are currently outstanding. And you'll also be able to see the number of days an average invoice is overdue, which is really helpful. So if the client typically pays invoices late, but everything else in the report is positive, then this could just indicate that they have maybe complicated internal credit control procedures which lead to long payment cycles, which is frustrating, yes, but hopefully not a cause for anxiety, because we know, generally speaking, you will get paid. So if you've looked at all of this and your client does have some concerning factors in their credit report, then it just means that you can approach the project differently. Not everybody has the luxury of turning work away, but you can mitigate the risk of non-payment by amending your payment terms or accepting payment in full, accepting a larger deposit to kick the project off, having insurance like legal expenses insurance, or buying trade credit insurance if the risk score indicates a chance of insolvency. Now, one of our most valuable services is Timely, which is a credit control service. And before we start, we always look into the client because this data can inform how we handle the formal late payment process. And on many occasions, we have discovered red flags. So when we highlight these to the freelancer, it becomes clear that they weren't aware of them. And they would have approached the project differently had they been aware of them. So in other words, what I'm trying to say is running a report like this can be used as a preventive measure to avoid any tricky payment issues down the line. In terms of how to obtain this information, there are plenty of tools online, but you will expect to pay for them. But if you're a WithJack customer, then we can, of course, run a report for you free of charge. Just head to withjack.co.uk and get in touch with us.